And look, only 1 out of every 100 Americans owns gold. 99% of the people that will watch this video are completely exposed. And while they've been watching their 401k and their home equity, the people running the world's central banks have been quietly moving thousands of tons of gold into their asset column. That's not a coincidence. That's a warning shot. And today we're breaking it down because this isn't a gold bug topic. This is household defense. Here's what I mean. Central banks used to buy 200-300 tons of gold a year. For the last 5 years running, that number is over 1,000 tons annually. And China's officially reporting numbers that don't match what's actually moving. And when the people printing the money stop trusting the money, the bill lands on the people still holding it. When institutions with trillion-dollar balance sheets flank a position that hard and stay quiet about it, that's not speculation. That's a signal. And signals like this land directly on your equity, your savings, and your exit strategy. So to break this down, I brought in an operator who's been on the ground for this fight for 17 years, since the 2008 collapse. He isn't a talking head. He came up in commercial real estate. He sold shopping centers. He ran triple net deals and still owns about 30 apartment buildings and commercial properties today. So when he pivoted into precious metals, he brought a real estate operator's eye to it, which is exactly why this conversation matters to you. He now runs Noble Gold and wrote the book on where this thing is headed. Silver is the new oil. He's going to walk us through exactly what he thinks China is really sitting on, and it's not what they're reporting.
This is the Epic Real Estate Podcast, contrarian takes on money, housing, and policy without the guru nonsense.
Let's go, let's go, let's go, let's go, let's go.
Let's go.
So help me welcome Mr. Colin Plume to the show. Colin, welcome to Epic Real Estate.
Thanks, Matt. Nice to be here. Excited to chat about all things.
Totally. So am I. You know, I had Jess Spreet from the Minority Mindset on last week. And it was a tough interview because we kind of talk about the same thing. And so it was tough for me to be curious. It was tough for me to ask the questions because I kind of felt like I knew all the answers. I knew what he was going to say.
Yeah.
So I did the best I could. But here's the good thing about gold. I don't know that much. All right. So I get to be really curious, and these questions will be legitimate from maybe self-serving, and then the audience can listen in on it.
Yeah, cool. I mean, I'm a big believer in all assets, tangible assets. I was mentioning before we got on that before I got in the gold business, I was in commercial real estate, sold shopping centers and triple net properties all over the world. I own about 30 different apartment buildings, triple net, The Habit. So I own that. And then, my other big love and passion is precious metals, which I've been involved with for 17 years now. I got started right after the financial collapse in 2008. So I've been doing this a long time and seen all the ups and downs and talked to people through it and educated them on precious metals and, really just focused on the education part of giving people good information about this business and how to acquire and sell. And so, yeah, I'm excited to answer any question you have and dive into it.
All right. I'm loaded up with them too. So this is cool. It's the Epic Real Estate Show. So I'm very partial to real estate for so many reasons. And I'm not going to get into all those reasons because you have that familiarity as well. But I had a guest talk about gold about a year and a half ago, 2 years ago. And I was so against gold up to that point. Like, why do you want that? It doesn't do anything, right? It just sits there and it doesn't go up or down. It's just like, I was bored with it. But she answered my questions to the point where I was like, okay, I think I need to get some. So I've been collecting here, not making large investments, but I've been accumulating here for the last 2 years. And so what was your transition? What initially attracted you to gold?
My first exposure was my grandfather gave me a set of junk silver coins when I was a child. And these are the ones that I got were pre-1965, 90% silver coins. And he threw them out on the kitchen table and he said, let's go through these. And he's like, this is a quarter, but it's worth more than 25 cents because there's silver content in it. And so it started to give me some education about what money is. And so he taught me about inflation and the dollar. So we started to learn at a young age about those things, and it's kind of sparked some interest. And then when I got into it again in end of 2008, 2009, I really saw gold really started to take off after 2001. After 9/11, that's when gold started to make a big push. And you saw more people getting interested in gold. You saw the gold price start to go up. But really what you saw was anytime the government starts to make artificially low interest rates or print money, you're going to see tangible assets do well. And real estate was doing very well too. Until 2008 and 2009 was when I transitioned out and you saw the credit collapse. And I think I learned a few valuable things that has stuck with me for a long time. Yes, real estate is a good investment, but it is very much predicated on debt. And we've seen that. We've seen that since 2022, that if you don't have rates that are commensurate with where you need them to be to make it a realistic investment, the market's going to be very difficult on the residential and on the commercial side. And so we're starting to see that, trillions of dollars of loans coming due in commercial real estate, where it's going to be very difficult for them to refinance without having more capital input into it. That is not always feasible. That's not always feasible. It wasn't always feasible in 2008 and 2009 either. It wasn't something, and I learned firsthand what the last few months I was in the business in 2008, 2009, I had a property in escrow. It was a strip center that the tenants had been there for 20 years, but they had no leases. They were all month to month, but they were paying. As soon as the credit collapsed, no bank wanted that business. They wanted secure credit. They wanted leases in place. Before the credit collapse, they were fine because money was loose. And so I think once you realize that, yes, there is a time and a place for real estate, but credit is a big part of it. And you can get stuck in a bad position. And a lot of people are getting stuck in a bad position right now in real estate. How do you counterbalance that? You got to have some liquidity. And so I think I learned in 2008, 2009, as I got in the gold business, you're getting an asset when you buy physical gold and silver. It's the one asset you don't have to worry about. There's no counterparty risk. You own the asset. There's no debt behind it. And so as long as you don't buy a contract, or as long as you don't leverage, as long as you do it the way that we do it at Noble Gold, you own the thing that you're acquiring and there's no debt. And there's so few assets that most people have that don't have that. So you got to be diversified. And that's how I've really built my philosophy on investing, is that I'm not saying you should put everything in gold and silver, but when times are tough, and I've seen it, I've seen clients over the last year or two that have other investments, but gold had gone up a lot. And if they needed to fund a new business, or if they needed to take some profit, they knew the gold value and the price, and they could liquidate it at any time, which we did for them. So it's good to have that flexibility. So that's how I sort of started to learn about the business. And then I, read so many books about how money works. And I think that people today are still in the dark a little bit about how money really works. And if you really look at it, the way that everything is moving is that every piece of society in wealth is trying to move you away from owning assets on your own. They're trying to get you to renting. They're trying to get you to borrow. They're trying to get you to all these situations because the top 1% owns all the assets that you're renting. They own the tech. They own the businesses. They own the layaway plans. They own everything. So yes, this agenda of telling people not to own things by themselves, it's just easier. You don't have to worry about it. It's better to be flexible. Don't own a home. Don't do this. It's all because the wealthiest people in this country own the businesses that you're borrowing from. And so it gives them a strategic advantage. So, and I'm not saying you shouldn't borrow, because I have houses and I have a mortgage and I leverage things. But when you don't have anything, if you're in a bad position, or if you have a few down years, if you don't have anything, an asset behind it, you're going to end up selling the thing that you've had and you're going to get into trouble. So you've got to have some assets that can grow, that will go up beyond inflation to protect you for those downtimes. Because nobody's business life just goes up, right? It's all ups and downs, and you get fired and things happen. And what are you going to do when you get fired? Or what are you going to do when the business has a slow year? You got to have something there to protect you that's kept up. And gold has kept up and done better than inflation for thousands of years. It's doing better than the dollar. It's always done better than the dollar. And if you really think about it, an ounce of gold today, an ounce of gold 100 years ago, it does kind of the same thing. An ounce of gold 100 years ago could pay rent. You could feed your family. You could do all that stuff. Well, guess what? Average rent in this country or mortgage is in the $2,000 or $3,000 range. An ounce of gold is $4,000. So 100 years ago, paid for rent. It helped you survive. And 100 years later, it's still doing that. In a lot of ways, even more, because you'd still have money left over. If your rent was $2,000 or $2,500, gold's at $4,000, you still have money left over to do other things. So it's giving you the ability to survive. And that's part of the reason people buy gold. There's obviously the potential growth. There's, a million other reasons to own it, the liquidity, the lack of availability. There's so little gold in the world, but having that asset to protect you through the ups and downs is really one of the strongest reasons to acquire it.
Right. Right. That's a little bit more of maybe a defensive move you're talking about, right?
True. Correct.
Right. It's there to preserve, your buying power versus the fiat currency is kind of how I've had it framed my whole life, or the whole time I've been aware. There's actually an offensive play as well that is what really kind of got me over the hump to actually start acquiring gold and accumulating. And it was when we talk about inflation, that's kind of pegged, I guess, to the value of gold, right? To go up and down. Is that accurate? What causes the price to go up and down? I guess let's go there and then I'll ask my question.
Yeah. I mean, I think there's a few. I think number one, it has to do with the value of our dollar. It's one piece of the pie, which you have to really look at long term. When you're looking at this, where do you think the dollar is going to go? Right? Like, you think the dollar is going to continue to lose value, then you want assets that counterbalance that. So I think that is first. That would be a check mark for me if you believe those things, which most people believe that's going to happen. That would be the first reason to own gold. The second reason is who's buying it. And central banks have shifted their money from US dollars, US debt, US treasuries to gold. This has been happening over the last 5 years. They've been buying more gold. So to give you an idea, before the last 5 or 6 years, the amount of gold bought by central banks before the last 5 years was anywhere from 250 to 400 tons. The last 5 years, it's been 1,000 tons. So they basically just taking money out as debt comes due. They pull it out of the dollar and they go into gold. So you have massive amounts of gold being purchased by so many different countries, and mostly the East, mostly China. And by the way, the number one thing I would say is if China says they're stopping to buy gold, you laugh and then you look at the charts a year later and you're going to realize that they just lied. And I've been doing this for 17 years. They literally, 2 years ago, they were telling you, we're going to stop buying gold. 6 months later, you found out they had been buying more gold than they've ever bought over 6 months. They have a peculiar relationship because they also own the most US dollars. So if China said you should only buy gold, the dollar would just go like this, and they have so many dollars. So they kind of have to walk if it makes sense, they have to walk a tightrope of selling dollars and gold. They don't want their dollar to drop, and then they're basically just pushing gold up. They want to kind of keep it so they can buy and sell at a good price, which is, in essence, it's a great problem to have.
Yeah, and it's an indirect benefit.
Yeah, it's the greatest thing that anybody would want is to have that issue. So you just have other growing countries like Poland. Great example. Poland is buying gold. Their reserves is about 15% of their reserves are in gold. They want to get to about 30%. Been one of the biggest active buyers of gold, and really a country that everyone in a lot of ways should admire is what Poland has done after they got away from Russia in early 1990s. They were like top 100 economies in the world, and now I think they're 26th economy in terms of growth because they focused on education, they focused on manufacturing, and they bought a lot of gold. And they continue to buy a lot of gold because they believe the reason that they say they buy gold is they want sovereignty. They want independence. That's why Poland buys gold.
I've covered that pretty extensively here on the show.
Oh, okay.
No, that's fine. I'm glad we're revisiting it. But a lot of the different countries buying more gold, as you'd said, in the last 5 years, like they're buying kind of more gold than they ever really have.
Yes.
At least in our lifetime. And even the country, which I wasn't aware of until I was doing the research on this, that I think it was countries like England, and it might have been Turkey, but I didn't know they had their gold actually stored here in the US. And they're actually calling it back. Like, we don't want to store it there anymore. We want it back. So in the last 4 or 5 years, what's happening that's causing those types of actions?
Yeah. So Germany has also, it's called repatriating. They also did that. After World War II, many countries would have their gold here at the Bank of New York to store their gold. It was just a safe place to do it. B, you could leverage. If it was here, they would let you borrow against it, which is a great thing. That's a nice advantage for countries. So a lot of them had it here. But 8 years ago, Germany was worried about our economy and said, we want to get all the gold back. And so they've every year and I don't think they have any still here, but there's been a number of countries that just don't feel comfortable with the way that we're handling our books and handling our finances. And so they just continue to pull it out of the Bank of New York. And there's really been a big push for a lot of countries to move away from the dollar in general. And by having gold here, they're sort of tied to the dollar and trading against the dollar. And the dollar's lost a lot of value. So they want to have flexibility in trading. Like what's happening with the Strait of Hormuz, like Iran and China are trading, but they're trading in the yuan. They're trading in other currencies. So countries are continuing to move away, which is really a detriment to us because one of the strengths of our currency has been the petrodollar, the fact that oil has been traded in the dollar, which is a deal that we put together in the 1970s that gave us a tremendous advantage over the world. That's far more and more that's going away. We're losing that strategic advantage, which is part of the reason that our dollar is continuing to lose value. It's one of the reasons that it's continuing.
Well, I'm glad you brought that part up. And it's that, inflation is really crushing the purchasing price or purchasing power of the dollar. But actually our dollar is gaining strength in comparison to the global currencies, right?
Right now. Yeah, I think.
How does the average person kind of interpret that and what should they do based on that interpretation?
If you've been grinding for deals and coming up empty, you're not alone. That's why we created a way for frustrated investors to finally get cash flowing income property without the hassle. Go to frustratedinvestor.com. And now back to the show.
How does the average person kind of interpret that and what should they do based on that interpretation?
Yeah, it's the best of the worst, right? I think that, we are in a unique position right now that the dollar has been getting stronger, but most Americans aren't really feeling it. Unfortunately, they're not really feeling it because the cost of goods, like oil, for instance, is still going up dramatically more. Also, the wars that we're getting into, there's tremendous cost to us day to day for us to get involved. It all translates into who's paying for it. And even beyond that, even AI. People don't realize that there's no way any of these companies can pay for the amount of research and development that's happening. In the end, the government's going to come in and you and I are paying for this AI change, this change in how we do business day to day. It's like the Industrial Revolution, everything's changing, but you and I eventually will end up paying because a lot of these companies are going to go bankrupt. A lot of these companies are going to need bailouts. They've even said that, the electrical system and these grids, they don't have enough money. They're going to have to get bailouts and the government will end up having to bail out some of these because once we're completely dependent on these systems, what if they go down? We will have to bail them out. There won't be, if a company goes out, OpenAI or any of these, they go out of business, but we're dependent on it. Let's say our day-to-day functioning of getting our Social Security or getting our benefits, all that's on the AI system and it goes down, we will end up paying for it, which a lot of people, they don't understand. Even though OpenAI and all these companies, they charge a fee, they still lose trillions of dollars. So we end up paying for it in the end. And when you move on a system that you become dependent on, that's the problem, is that we're all going to be dependent on the system. And then we're going to have to eventually bail that out, which I think is another reason for people to consider tangible investments, is that you can get into something that's independent of that system. You're not tied to that fiat money. The governments are doing everything to get every dollar tracked, get every dollar through the system. They talk about these CBDCs and all these things. They're just looking for ways to track your money and know what you're doing at all times because they want to tax you, basically. But gold and silver is a way to get some exposure outside of that system, some protection that you have in your hands. There's nothing else like it. There's nothing else that has value. You could move $1 million. I usually, I don't have it with me, but I have a gold kilo bar that's it's basically the size of your phone, right? It's a little bit smaller than this. It's a $150,000 bar. I mean, you could put $1 million in your backpack and go anywhere in the world if the system goes down or the grid goes down, or if you just want to move. There's nothing like that in the world that you have the availability to do that to. So, and also it's valued anywhere. There's nowhere they won't accept gold, but there are places they don't want the dollar. There are places they're not going to want anything to do with our stock market. It is the universal money, which I think is, to go back to your initial question, is like, why? These are all, I don't think it's one reason. I think it's a combination of all of those reasons why someone should own it. And then the last thing I would say is that just how much gold is pulled out of the ground every year is only about 1%. If our dollar only had
1% of what's above ground or
above ground, yeah, there's only 1% that they can pull out of the ground each year, 0.5% to 1%, and they're having a hard time finding gold. It's not easy for them to find gold. It's actually very difficult. And actually, if you really dive into what China owns, they report 2,400 tons, little less, give or take. But if you actually look at how much gold mines they own, how much gold is actually in the country, it's like 4 or 5 times that amount. I actually believe China has more gold than the US. But like I said earlier, they are in this quagmire of they don't want to buy or accumulate too quickly because they do not want to hurt the value of the dollar. It's a very smart strategic move. But they'll just slowly go up. And they've grown, on the books, they've already grown every year. But behind the scenes, how much is in the country, how much some of their private banks own, how much their citizens own, I would estimate closer to about 10,000 tons of gold is what they actually own, which would be about 1,000 or 1,500 more than what we have, or what supposedly we have.
how much more than we have, you think?
I think they have about 1,500 tons more than the US. I think we're at like 8,400 tons. I think they have, just based on the research that I've done of just gold that's been determined to be in the country, and then also gold mine. Because like when you pull it out of a gold mine, not everything's going to be reported. They don't want to report everything. They want to keep their numbers low. It's kind of like, not reporting everything on your taxes, right? They're trying to keep their numbers low to stay under the radar. But my gut is that they own much more than that.
That's a good metaphor for the tax thing. Because as an entrepreneur, it's a tough spot to be in, right?
Yeah. You don't want that salary to be too high.
Right. But then you need it to be high if you want to go take advantage of the rest of the financial system, right?
Right. It's like, oh, you want to buy this $1 million house, but you only make $80,000 a year. Well, I might make a little more.
Right. Between you and me, you know how we do it. Right?
Yeah. Let me show you this balance sheet over here on the left. It's a little bit different than the one, which is the benefit of owning real estate too, right? I mean, that's one of the great things. There's all these write-offs, but it's a long-term play. I mean, when I got into commercial real estate, I was meeting with all these people initially, and they were all business owners that bought real estate. And they all said, I'm buying this for 20 years. They would never think about today. They were like buying it for 20 years from now. And I think that's the great thing about it, because in 20 years, it's going to be amazing. But also, can you survive that 20 years? And that's going to be what's going to happen over the next year or two. If Worst doesn't lower rates or make it a way for people to get money, there's going to be a lot of commercial property coming back to the banks over the next year or two. So it's going to be tough.
There's a lot of uncertainty there, right?
Yeah.
We've been talking a lot about the macro look of gold.
Yeah.
And let's bring it down to like the kitchen table of the private U.S. citizen, how they should interpret this and the moves that they should make. And I think the big question is like, how much should you own? I'll just give you kind of my rule of thumb of what I've formed or formulated over the last couple of years. Is I'm really big on siding myself and not fighting the Fed, and just kind of going with the flow, because the Fed is going to always win. The system always wins. So if you want to win, you kind of want to look at what they're doing and do something similar. And so inflation is really our big enemy if we are saving money, right? It just destroys the value of the dollar. But it's what I always say, it's a it's a non-discriminatory force. So it devalues your dollar as much as, say, it devalues the bank's dollar. And if you're using the bank's money to purchase assets that are inflation hedged, then inflation actually works in your favor by devaluing your debt, right?
Right.
The long-term fixed rate debt. And that's a concept that, it took me about a year to really grasp, but now it's a central focus of my own personal finances. It's a central focus of what I talk about on the show, because, we can look at it in simple terms and be the Dave Ramsey and all debt is bad. But in the grand scheme of things, that's kind of what makes the inflationary system run, is when you do save the dollar and not use it like them.
Mm-hmm.
And, right? And so as far as go back to what my actual question is, how much gold should you own? So here's what kind of I thought about. If the dollar were to collapse, and it's probably, if it happens in our lifetime, we don't know, but it's got to, at some point, there's going to have to be some sort of reset. And when that dollar resets, it's going to reset our debt as well. And, so if it took 10 ounces to pay off your mortgage today, when that dollar does reset, maybe it only takes 1 ounce to pay it off. And so that's kind of like the calculation that I've done. Let me get enough to where I can at least preserve the roof over my head if the dollar were to go to shit, right? But I don't know, maybe there's another way to look at it. What do you think is it a percentage of your investments? Is there an actual ounce that, like everyone says, if you want to be a Bitcoin millionaire, you just need to hold 1 Bitcoin, right?
Yeah.
Is there an equivalent to, say, gold in that sense? How much gold should they own?
Yeah, and I think it's a fluid answer. I think the one thing that I'm concerned about right now, the more that I research, is how much people's money is blindly in the AI bubble that they are not aware of.
Mm-hmm.
I think people would be surprised how much exposure they have to AI, how much exposure even through large companies that are typically super strong, that have leveraged Apple, all these companies borrowed to build these AI engines because they want to keep their stock price high. So they're not using cash, they're borrowing. There's so many major companies on all the indexes that are borrowing to build AI engines that have not been proven. And so I think more people have exposure to it than they realize. And so if the collapse is as big as what a lot of people are saying it is, the pullback could be pretty great. So I think there's a few different things to look at. I think that you have your IRA, 401k money, and you have your other investment money that's outside of retirement accounts. And I think that, your IRA, 401k money, if you're closer to retirement, you got to be really cautious. And the rule of thumb used to be like, you get into bonds. Remember, you do like 60-40 and you get heavier into bonds. But now, if you look at all the big financial advisors, they're actually recommending about a 20% allocation into gold. Morgan Stanley, all of these companies change their numbers and they've pulled back the amount that they think that you should have in bonds because they don't think bonds are enough return. B, they're not comfortable with the bond market. They've actually they've changed the allocation, which is a big shift. When I started in the business 17 years ago, they were telling you like 2 or 3%. But now we've created so much debt. And to your point, this inflation that's rampant. When I started, inflation, the numbers calculated were like 2-3%. Well, since COVID and how much money we've printed since the beginning of COVID to now through wars and everything else that we're trying to do in lowering the taxes so the government's getting less in. I mean, there's just rampant money printing that we have. So we're in a unique position where even the big institutions are saying more gold. But if you look at the retail U.S. investor is like 1 or 1.5% actually owns gold. So it's a pretty small amount that the U.S. investor owns. So I think there definitely could be more there. I think the nice thing about the IRA conversion into gold is that it's not only do you get some protection for whatever amount you decide to do into it, the fees are lower in terms of holding gold in an IRA. You look at annual fees for most 401ks, it's anywhere from 1 to 1.5% annual fees. Our fee to hold a gold IRA or silver IRA or any of the metals or all of them is $275 per year, regardless of the dollar amount. So when you look at that compared to other assets, you're doing like $100,000. You typically
$275. That's it.
That's it. That's the hold the gold in the IRA. That's
regardless of how much you own.
No matter how much you own. Yeah.
Wow.
And I was just so we store in Texas in a segregated account, which is everyone's metals are separate. We do that at Noble Gold because that's how I feel the most comfortable. And I have clients there that have millions of dollars in silver. It's pallets of silver. Not kidding. I can't show the photos, but I sent them to my client because I do an audit, and they're paying $275 per year. If they're in a mutual fund or they're in any other, they'd be paying thousands and thousands, those kind of people would be paying $30, $40, $50, $60,000 a year in fees, and we're at $275. So I think that's a nice benefit in the IRA to be able to have gold. It's actual gold. and it's stored. The other thing that's great is that
You store the metals too.
we store it. Yeah, correct.
I guess it has, if it's in an IRA, or any
It
sort
has
of
to be stored,
it has
at
to
a
be
third
stored,
party. And actually, the company's a third party too, and they're a big company. They've been around a long time. But I actually go there and I do blind audits. So I'll go there for 2 days, and they'll pull out like 100 accounts, and I'll just go like ounce for ounce. And then if it's a client, I'll just call or send them an email and say, hey, I did an audit, just to make sure everything is right. But yeah, it's important to realize that like what fees people are paying, and as those accounts get bigger, those fees get bigger. And people don't realize, they've done all these studies like 401k fees over 20, 30, 40 years. It could be like hundreds of thousands of dollars you're spending in fees.
Yeah.
So I think it's nice with gold that you don't have that. It's much less to hold the gold in an IRA. It's stored and it's insured. Everything is protected there for you. The other thing is when you have to retire and you want to take possession, or you want to take cash in you have a retirement age, you have to take some out. You could take some of the gold or silver, or you can liquidate into cash. There's no asset like that. So a lot of people have come back to us and say, just ship me my RMD that the government requires is, $5,000. Ship me some gold and a little silver, and I'll pay my tax separately. And then they take possession of the gold and silver. It's a cool approach to not have to go back into the dollar, because the dollar's losing value, right? Like, you don't want to get into something that's losing value. So I think that flexibility of gold, having some gold and silver to balance some of the other things that you have out there. So if the market takes a tank, or if things happen, that you have another asset to hopefully, nobody can guarantee it, but hopefully, stock market pull down, it goes up, or vice versa. A lot of people have been really happy over the last few years because their real estate's been a little slower, or maybe the stock market in 2022 pulled back and gold was going up. I just think it's good to have this balance in your IRA. So I can't give anybody an exact percentage because I'm not a financial advisor, and everybody's, amount is different. But I think if you believe the dollar is going to continue to lose value and you want some protection against that, you like the idea of owning something physical that's, there's no money manager behind it, like you actually own it, you want control. I think gold is a nice fit. Silver is a good fit for that type of person.
You said RMD. What's that?
Required mandatory distribution. So once you hit 70.5, they require, if you have a traditional IRA, the government wants to start taxing you basically. So they force you to start taking out of your IRA. So we stay on the account. So if you call us and we go, okay, I'm 70.5, we'll get in touch with the custodian and you can decide like, okay, I need some cash, and we'll buy back the gold and silver. Or you say like, hey, deliver me the gold and silver. Great. So we'll have the gold and silver delivered. You'll pay the tax separately. So we're involved. That's how, Noble Gold really is known as like, we're the one gold company that like stays around the whole time. A lot of the gold dealers, they just sell you the gold, they're gone. But we stay on and help you through the lifetime of that account, because there is things that come up that you need help with and paperwork. So we do all that for you.
Yeah, when you said RMD, I was thinking in the context of gold. I wasn't thinking retirement.
Oh, yeah.
All right. So you mentioned something like, hey, real estate's been a little bit slow, and, gold has actually pulled back. It's been 6 months since we broke 5. I just checked. Right. We're 4.
Yep.
Just a couple bucks over it. I don't know. How do you feel about the current state of gold, and what do you see for the future?
Well, it's interesting. I mean, the most buying on the retail side that we've seen for the US was the last quarter of last year and the first quarter of this year, when gold was over $5,000 an ounce. So if that many people like the price of $5,000 an ounce, why wouldn't you like the price of $4,000 an ounce? If you can buy anything at a discount, you should buy it at a discount. And I think the fundamentals are still the reasons why people bought, right? That's why they bought it at 5,000. That's why they bought silver at 100. It's well below that now. So I think either you bought it there and you should dollar cost average, or if you've never bought, coming in at this point is really important. And I think that, what people need to realize is that I always hear people all these years, they'd be like, they've been telling me for 17 years that gold's expensive. It's always been expensive.
Yep.
But then it hits a new high and they go, I wish I bought. And then it's too expensive then. And then it's like everything is more expensive. I think that the eye-opening thing for me in the last like few months is, have you ever heard of this supermarket called Erewhon? Have you heard of this place?
Yeah.
It's it's the most overpriced smoothie market. And they have everything there. I mean, they sell like a Japanese strawberry for $35. Smoothies are $22. Mm-hmm. And you go in there and it's full. And the people there, the young people that are going in there that are foolishly spending this money, they don't know any different. They don't think a smoothie is going to cost $10. They think it's going to cost $18. And I think that's what people need to realize, is that the problem with being old and wise is you remember how things were back then and you think it's going to go back to that price. It's not going back to that price. Even a good example, like real estate prices have gone up, right?
Yeah, no, the conversation you were having, like, that's the exact conversation I have every day with real estate.
Right.
I don't want to get into real estate. The market's not good right now. So you're going to wait for prices to go back up before you get in?
Yeah.
It's a funny question.
Yeah. I mean, I know there's some markets that have gone down,
Mm-hmm.
but the core markets, the big markets, have either stayed the same or gone up because the fundamentals, the people that are in that house are not selling. They don't want to sell. A, B, the labor costs to rebuild a house, to labor, everything have skyrocketed. There's less people that can build a house. There's all these fundamental reasons why the housing market is going to hold firm, right? Similar dynamics into gold. It's still very expensive to mine gold. It costs a lot of money and time. Even if you told me you wanted to mine gold, it would take you 10 to 15 years to get 1 ounce out of the ground. So it's not like something you can just ramp up overnight and be like, we need more gold. And if you look at the mining reports, they're having a hard time finding gold. Same thing on the silver side. The silver is a really interesting story. If you really dive into it, they only pull out about 800 million ounces of silver every year. They've had a shortage for EV and solar, all the things they use silver for, technology. They've had a shortage for 6 years in a row. If you look at the market for like SLV, there's 5 billion contracts that get bought and sold every year. So there's a lot of paper moving. There's a lot of paper and gold moving, but there's not a lot of gold moving. There's not a lot of silver moving, actual silver. The contracts are moving, but not the actual metal. There's just not enough. So there's always going to be a shortage of those things. And like similar to real estate, it's going to be a shortage of good real estate, right? There's the shortage of the ones where people actually want. And then to rebuild that home, to get the labor is always going to be expensive. So it's like the kids that are buying the smoothie for $18 or $20 and an older person goes, they're crazy and they're this. It's true. But in 5 years from now, you'll look back and you'll just think a smoothie costs $18. You won't say it's expensive. They're just obviously overpaying now because the market's $12 or $11 or $10 or whatever it is.
Yep.
But eventually the market moves, the costs go up, the cost of the strawberries goes up, everything goes up. So I think gold's like a stair step, and it's going to continue to be a stair step forever, unless you believe we're going to reduce our debt. And if you believe the dollar is going to get stronger, if you believe that those things, then I would be nervous. But if you don't believe that, then there's no reason that gold will not perform like a stair step for the rest of time, because it'll go up, hit a number, it'll have a sell off, people will take profit. And a lot of people took profit with us at 5,000 because I had people that bought gold for me at $1,300 an ounce 5 years ago. So a lot of them said, I'm 5,000, I'm going to sell. But now, guess what? They're sitting in an IRA. They didn't pay any tax. What are they doing? They're buying back in at 4,000. And then they're going to ride it back up to 6,500 and they'll probably sell again. And all of that will be tax deferred in their IRA.
I'm actually listening to everything you say, so I forget the question I was going to ask.
Yeah, I know I'm throwing a ton at you. I mean,
well, there's so much to discuss, know.
Yeah. Well, it's cool because I have this real estate backing too, and I own real estate, and I own an Airbnb, and I own all this. So it's like I'm not in a silo about the gold business, like in how gold works. Like I know that there should be other assets. I just think it's timing. Real estate's a longevity game. You got to buy right. There's all those things that are happening, and so I think it's just like a balance. I'm not selling any of my real estate. I didn't sell any of my gold either because I know that gold's going to. I know that gold's going to go to $10,000 an ounce. I know it's going to happen in the next few years, and people are going to be like, "Oh," and they're going to tell me at 6,500 it's too expensive, and then it's going to hit 10,000. I know it. It's funny. My accountant, who's bought gold for me pretty consistently, he's just called and he's like, "Okay, 4,000, it's a good price," and I'm like, I love when I have smart people that see that because he's like, "Oh, it already hit 5,300. I'm buying it at 4,000. Of course I'm going to buy some." And he just buys it and just puts it away. We just store it. He doesn't think about it. And he's like, and he told me, he's like, I think when it hits 10,000, maybe either I'm going to give it to my kids or sell or whatever it is. But there's so much evidence and so much pushing towards the price going up that it will be volatile and things will happen, but I do think the stair step analogy will be pretty consistent.
Yeah, I mean, I think there's a correlation there. Maybe not correlation, but at least a mirror of real estate.
Yeah.
Because you look right now, the median price is at the all-time high, but the public sentiment on real estate is down in the dumps, but it's still at an all-time high. But if you look back in history, there was never a bad day to buy real estate.
Right.
You could have bought real estate the day before Lehman Brothers tanked. As long as you didn't sell it,
yeah.
you've doubled, almost tripled by now.
Yeah. Well, it's a perfect storm right now with the all these people that have the 3% mortgage, right? Or the 3.25 or the 2.9. They are not going to sell that thing. So you're not going to get a lot of properties hitting the market. So you still have a supply and demand issue.
Yep.
Which is what keeps prices up. Right. I mean, I think that's the only people that are really selling are people that like get divorced or somebody dies or, it's all those sales.
Mm-hmm.
It's not Joe and Jane that like want to move. There's nowhere to move. They got a good rate. They feel pretty good about it. They like where they live. Or if they don't like where they live, they're having a hard time thinking about moving because they're going to have to buy a house at a 6.5% or 6.6%. So you still have that perfect storm of supply and demand and desirability if a decent property hits the market.
Speaking of supply and demand, the one thing, and I'm going to play devil's advocate and you can push back from the precious metal side, is the one thing I believe so heavily in real estate is that it has utility and it fulfills a basic need for humanity. We need a roof over our head.
Yes.
Right? I look at gold, and yes, I know it has historically has always been the currency and everything, but still it takes the belief of the person to actually add the value to it, right? Or is there something that I'm missing about that?
Well, 60% of gold is in jewelry in the gold space.
Mm-hmm.
I think that's not going anywhere. And I would argue with the diamond market really collapsing, gold's become more valuable in jewelry. Because at the end of the day, I think it's always had a place in your wedding band or in the jewelry you're wearing or anything but now to know that you're actually are buying something that will continually go up, it does give you some comfort. When you buy that wedding band and it's like 10, 8, 6, 12,000, whatever it is, that in 20 years or 30 years or whatever, and whatever, you don't need it or you decide and you're going to take it off or you give it to your kid, like that thing's going to be worth 5 times. Whereas if you buy diamonds, there's no reason to buy a real diamond anymore. They're all losing value tremendously. So there's no real value. So I do think there will be that jewelry demand.
What I'm talking about, Colin, is the actual value that a human being holds for gold versus real estate. Like there's amazing value of keeping my family warm at night and out of the elements.
Sure. Yeah.
Where's the value in the gold?
Yeah, no, I think that makes sense. I think it's what it is it's first of all, longevity, right? Like gold's been around for 5,000 years. It's always been used as a currency or a currency hedge. It's always had that place. I think more and more people are not trusting paper currency. So what's the alternative? Does it act like a home? No, but I think that people realized during the pandemic that they can move anywhere or they could downsize or they could get into a different place. I mean, I do think a lot of the real estate market has been propped up because of all the tax laws and all. If we pulled a lot of those things away, the housing market would substantially drop. If you couldn't write off interest, you could depreciate. If you can depreciate and write off interest and you can't get a mortgage at a rate, the real estate market, in my opinion, would drop 40, 50%. It's really only the reason is they've created all these incentives outside of it. Owning real estate is hard. It's expensive. I like the flexibility of gold compared to real estate. And I like the idea that I can sell it at any time. I think the problem with real estate is, as I said earlier, you have to be prepared to own stuff for a long time, 10, 15, 20 years, because you're going to go through the ups and downs, or you're going to rent it to a tenant that's not going to pay and you're stuck with them and you got to evict them. And it could take or the roof has to be fixed and the cost of labor is going to there are some costs there that make real estate, as much as it's your home. I mean, you could just rent, right? Like let the landlord figure it out.
Yep.
And there's some places in this country that renting has actually been, for the last few years, has actually been more profitable because the cost to fix your home has gone up so much. It's gone up in the last 5 years more than it's gone up in 100 years before that. I mean, let's be honest. Labor costs, the fact that, what do they say? for every 7 construction people that retire, only 1 new one comes in the business. There's a lack of that, and that's just going to continue to rise. So there are costs behind the scenes in real estate that you don't have with gold. Like if I shipped you gold and you didn't do it in an IRA, there's no cost to store. There's nothing. You just put it in a safe. So there's a day-to-day cost of most investments. Whereas once you buy the gold and you buy it from whoever you're buying, you hold it, the cost could be gone. You own it. And that's a nice thing to have, that there's no annual cost if you just own it. For the IRA, there are storage costs and things like that. But so I do think there's pros and cons to every.
Really? No, I think I'm a believer now that you should own both. This is what I think.
Yes.
And we talk a lot here about the K-shaped economy, and it's the person that owns the assets is going to end up on the right side of that K.
100%. And then the utility, I would say, like silver, there's so much utility.
Yeah, no, I see that. I see the silver utility for sure.
Yeah,
right.
Silver's, it's a no-brainer in terms of the amount of uses. I wrote a book. It's called Silver is the New Oil. It's on Amazon. And I compare what silver as a commodity and wrapping oil in terms of usage, not replacing oil, but wrapping it in terms of like it's replacing some of the uses of oil, like electric vehicles and EVs and a lot of those things that let oil really dominate. Silver sort of taking some of that on. So for a pretty low price, $60, you're owning an asset that really does shape a massive amount of our economy. Silver is a necessity today in the world. And there continues to be shortage. So there is a utility. I don't think it's hard it's not a hard stretch to see how much silver is a necessity in today's world. Mm-hmm. And not owning it, in my opinion, is a massive mistake to not have some of that in your portfolio. I think everybody should own it. We do gold and silver, platinum plate, all those, but I think silver has been pretty dramatic push. It did hit $120 an ounce, and now we're sitting in the high 50s.
Yeah, it's 58 right this second.
Yeah, so I think there's a lot of demand. But silver is day-to-day more volatile than gold, just because of where the price is.
Cool. Perfect. Well, I like to let everybody make up their mind is with regard to what decisions they want to make financially. This is not legal advice. There's my disclaimer. But if you'd like to talk to people at Noble Gold, Colin's people, you can, my little affiliate link is down below in the description. But also next to that is the 10 questions we've been handing out here for a couple years on when you do pick the person that you're actually going to acquire your gold from, the questions you should be asking. Because Colin, it's no secret that, it's kind of a dirty business. There's a lot of shady, weird stuff going on out there.
100%.
So I want everyone to be protected and to be able to ask the right questions.
Yep.
So grab those questions. And then in the little document that you're going to get with the questions on it, there's also my affiliate link there for Noble Gold. But I thought, Colin, while we're here, why don't I ask you some of these questions?
Sure.
You down? Okay. And these were kind of made for myself, really, because of someone that doesn't know a lot about gold, or certainly didn't know very much when he got started, and I still got a lot to learn. But explain to me what the spot price is.
Spot price is in essence, kind of what gold and silver, the essence price is, exchange price.
Would that be like a value of a stock? Like this is what the stock
is? It's like a contract price. You're not going to buy gold or silver at those prices. You're going to buy above, depending on the demand and supply and things. It could be, depending on how much above. But it's a gauge. If you own gold and silver day to day, it's something you want to watch, because as it goes up or down, the value of your physical metals will go up or down. It's a good way to track your portfolio. But typically the metals will trade above on both sides of it, depending on where the market is. Sometimes during COVID, I saw like Silver Eagles, which is the most popular coin. They were trading $7, $8, $9 above the spot price because the demand was so high, but it does ebb and flow. But it's a great question. And it's, as you call in and talk to Noble Gold, they can go through the price of products that day relative to the spot price. So it's a good way to gauge where the market's going.
I mean, you're running a business. You've got to make a profit somewhere. And I don't think you're getting rich off of $275 a client. How does a gold dealer, how do they make their money? Is it just the spread between what spot is and what they charge above that?
It's the spread of what it costs us to buy the product, and then above that. Because there's a wholesale market of what those things are, and then there's a spread above that. There's a few different ways that companies work. There's probably 3 different ways. There's companies, most of the big advertised companies will typically try to get you to invest into specialty coins They're called numismatic coins. They're going to tell you every story under the sun, why they're valuable. But every horror story of someone getting overcharged is going to be in those coins. And most of the radio, most of the TV you'll see is mostly those companies. That's not what we do. Then there's big online platforms that have thousands of coins and bars to choose from. They have different spreads on all the different products, but it's like a warehouse of things. Sometimes they sell those specialty coins. Sometimes they sell bullion. Sometimes they do both. Those are big animals, big companies that do that. And then what we do is we actually just sell bullion, which is the bars and the coins. That's what the central banks buy. That's what, like during COVID at the beginning, nobody had silver. And the only thing that was really available was 1,000-ounce silver bars and kilo bars, silver kilos. So what I did is I pulled money out of my own personal account. I bought every ounce of those that I could buy. When clients call in, I say, we can't sell 1 ounce rounds. We can't sell this, but we can sell these. And so we sold a ton of those. And I was competing against COMEX for those products. And so what we do is we try to see we can get at the best possible price. And then we talk to clients about whether it's a 1 ounce round or a kilo bar or an eagle, or it's typically bars are the best. So we charge commission based on those products. We charge a flat fee. We're much lower than the industry standards on all of those products. So that's really the three ways that you can buy precious metals in the industry, the physical metals. And if people look us up, they can check out our reputation. We can send you all our agreements. When you call in, we can go through the prices of every day. The price of every product is going to change depending on the market and demand. So we go through all that. But we spend a lot of time on pricing, and we're very transparent. We put you on our recorded line and we give you all that information, and you tell us to move forward. So we do our best to give you all that information and let you decide, do I want a coin, or do I want a bar, or bigger bar, or smaller bar? So you kind of make the decision on what you want to purchase.
Got it.
That's how we make it.
So if it was coming to pricing, let's say your mom came and asked you, Colin, I'm going to go buy some gold from this other company. What would be the advice you'd give to your mom if she wasn't going to buy from you?
I would say I'd ask a few questions. One, ask them what they're recommending and why. And if they go into a long spiel about how these coins are more valuable and that you can't find these, or they're going to go up, or you don't have to pay taxes, these are all the scams. And if you go to a lot of my competitors, if you read their complaints on the BBB, you'll read all of these. The salesman told me he was only charging me 8%, but he charged me 55% because I bought these coins. Or if they promise you $10,000 in free silver or $10,000 in free gold, any of those are scams, 100%. Also, I'd make sure that there's a two-way street. Like, we buy and sell. The problem is a lot of times people don't realize, and they don't ask the question, like, will you buy back? If they don't buy back, that's not a good sign either. That means that they overcharged you. They don't want that product back. They don't want you to know what you paid. So we do both sides. We do the buying and selling. You want to make sure, because if you get a big profit and you're in the right place, you want to be able to sell it, right? And right now, there's gold companies that have gone out of business and overcharged people, and they're having a very hard time finding anyone to buy it back. I mean, we do buy back from everywhere, so we are a player in that market, but obviously we're going to pay what the market is on that day for that product. And a lot of times people went with the dealer, they got overcharged, and now they're having a hard time sort of liquidating it. So I think you want to have a two-way street, which is another reason, like, people ask me about Costco, which I like Costco, but you can't sell back to Costco. So what are you going to do when the market goes up? You got to find someone that you can trust. So that's why it's important to find a dealer you have a two-way street.
So when someone comes to you to buy gold, do you have that in your vault right now, or do you have to order it?
No, we have everything.
You have everything?
Yeah. The only time I didn't have it in the history of the company was during COVID, but I was able to lock in the prices. So I was able to guarantee the price to the client. It's only because I couldn't get, no one was delivering. But the clients really did well, because I was selling 1,000-ounce bars at like $15 or $16 or $17 an ounce. By the time 6 months had run up, it had already hit $29 an ounce. So I had clients that actually never took possession, because by the time I called them and I said, okay, I can deliver now because we were able to get it out of Mexico, and we were able to, because, they shut everything down. They said, no, I'm ready to sell. So we just bought it back, but they made a huge profit. Some of them had doubled. So that was the only time. Right now we're shipping in a week. So yeah, everything we sell, we have. If you want something obscure, like you do want some kind of rare coin for what you're building a collection, it could take longer, but we'll tell you. Sometimes people call us, they're like, I want a St. Gaudens MS65 or whatever. And those are really fun coins. Those could take longer, so we might not have it, but everything else is delivered within a week.
I stumbled across this story, I don't know, about maybe 6 months ago, 7 months ago, and I was blown away. And it was about, I think it was, I'm not sure if it was gold or silver that was coming out of China. And there was a video of them sawing it in half, the gold bars in half, and it was filled with tungsten in the middle. And the story, like, that wasn't the story that there's fake gold out there. The story was that it already passed some and it was circulating in the actual market.
Yeah.
How do you test for that? At first, is that true, or is I just finding some crazy meme on X? And then how do you test for
It's probably true. I mean, there's definitely stories on eBay where people like, oh, it was such a good price, and then it's not what they bought. We test everything in-house. We buy from all the major mints. I mean, we have a full testing process. When your IRA comes in, the vault manager tests your gold and silver, and then we're the only company that does this in the industry. We actually put your gold and silver out, and we take a picture of it. We have the vault manager sign it, and we send it to you. None of the other gold companies do that. So, I mean, it's a very diligent process for testing. And that's part of the reason I go to the depository a few times a year. I go and I check things out and I test. But yeah, it's something you have to watch out for. If you're buying from a dealer, you can check out the reviews. You can check out ours. I mean, if they're doing business the right way, they shouldn't be doing anything like that.
At the top of our conversation, you had mentioned that you are insured, or the gold is insured. How does that insurance work in the gold world? Does it work like the FDIC, or how does that work?
No, FDIC is for cash at banks. The gold business our metals are insured by Lloyd's of London, which is one of the largest insurance companies in the world. It's insured for, replacement cost, theft, anything. So, we guarantee everything, delivery to storage, all that's done. The depository has their own insurance, they're a multi-billion-dollar company. So yeah, it's a big part of it. It's a big part of the reason I go there. And it's a big part of the reason that we only do segregated storage. There's other companies, there's names that you would know, big companies that do not offer segregated storage. They just put it in a big vault with everybody else. Whereas ours, everybody's metals are separate. So that's a big point for me, is that I think people want to know that their gold and silver is safe and it's separate from everybody else's. But yeah, I mean, we've been doing this. I've been in this for 17 years. I've been working with this company for 10 years. And we've never had an issue. We ship millions of dollars every month.
So are you insured based on the price you purchased it at, or at the market price?
We're insured at the market price of the day if there was.
So if it got lost today, I'd be insured for what it was priced today.
Correct. Oh yeah, of course. Yeah.
That's how it works.
I mean, all insurance sort of works that way. In theory, your homeowners should adjust every year to replacement costs. I was in insurance many years ago. Yeah, you should have, everything should be to replacement cost on any policy you have. And some homeowners policies like 125% of replacement cost. You want to make sure you have replacement costs, which is
who manages that insurance and who pays for it? Or is that something you're regulated to have to do? Or is
the IRA is the $275 that you pay for the IRA, includes your custodial fees, your IRA documentation, all the reporting to the IRS, all the custodian documents, the insurance, storage. That's all covered in the $275. If we ship it to you, it's your responsibility, obviously, to store it. And then we do private storage for clients outside of the IRA. Insurance is included.
Is that $275 monthly, or is that annually?
Annually.
Okay, that's what I thought. All right. Well, super. It's been a pleasure.
Yeah, my pleasure.
Yeah. Go to hedgethefed.com if you want to download a copy of these questions, and then, give Colin's people a call and run them through the same questions, see if the answers match up. Yep. And then if you decide that you want to go somewhere else, ask them the same questions and collect all of your answers, and then just kind of trust your judgment and go with what feels right.
100%, Matt, what you just said. I actually say, call around a little bit and hear what people are saying, because unfortunately, a lot of times people go with the first call, and that's where usually people get in trouble. Because, I mean, listen, some of my competitors, they're spending, millions and millions and millions of dollars. Some of them are spending hundreds of millions advertising, and they have certain celebrities and they have all these things. And a lot of the big names do not do any due diligence at all. You do. You've done yours because you care about your reputation, but it's amazing. The bigger, sometimes someone gets, they ask no questions. And then someone that's got you have a good solid audience, you're actually interested and inquisitive. But, you do want to check around and make sure that you're going, and also just make sure it's a good fit. Like, we do the same thing too, because at the end of the day, like, you're probably, if you buy gold from me, you're going to be with us probably for 10 years. Like, we want to make sure you like us and we like you. And so it's got to be a good match, because you're going to call every year and go, hey, what's going on, Meyer? We want to build a relationship. So I think that's the thing that people will like, is that it's a relationship. We believe in relationships. You're going to like the people. So call us, ask a million questions, and if we can help in any way we can, and if we just give you insight into a new industry and you learn a little bit, that's good too. All of our PDFs and everything are free. You can ask for my book, Silver is the New Oil. Happy to send that to you guys too. Yeah, just love to educate, and it's fun just talking about assets with you, Matt. I'd love to come back on and dive into more stuff. The Fed's fascinating. Every meeting is amazing. So it's been fun.
There's just so much to talk about in this grand scheme of things. So you definitely come back and let's continue. Colin, you were referred to me by one of my closest, dearest friends, and you absolutely checked out. And I really appreciate your time for coming on the show and
Thanks for having me.
being so open with us.
Cool.
All right. You have a good one, bud. See you soon.